Asian markets have shrugged off the weakness in the global markets. You remember, US ended down nearly 0.5% despite the intraday recovery. European markets were down close to about 1.5 to 2%. But compared to that, Asian markets have opened up on the flatter side, and the SGX Nifty is indicating a mildly positive start. Our own market technical structure seems to have deteriorated in the last 2 days. Yesterday, we breached the 200-day moving average of 7805, and now it appears that gates have been opened for our markets to even test the 50-day moving average of 7715. But that said, we still seem to be in a very broad range of 7550 on the downside to 8000 on the upside. The big overhang is what's happening in the global markets, the weakness there, whether the Fed will go ahead and hike rates in June. And I think till the policy takes place, it could just remain as a bit of an overhang. Also, we've seen some selling emerge by the FIs, not just in India where they've sold for the last 4 trading sessions, but they've also been selling in the emerging market funds. That's what the data indicates, and if that trend continues, it could push the markets lower. We've been consolidating in a very tight band of about 150 odd points. Even if there is a breakout, I guess the broader range of 7550 to 8000 will sustain. Today, you've got a lot of important earnings. So ITC, which is down close to about 2.5% yesterday, will come out with the earnings. It'll be in market hours, so that could determine the way the market trend turns out. But largely, it'll be global markets, which will be a bit of a worry, and the fact that SEBI has tightened the P-note norms and the disclosures which are required there could also be as a bit of an irritant for our markets.